Loans for small business growth. As a small business owner, the best time to learn about financing is before you need it. When cash flow is tight and your livelihood depends on it, you won't have time to figure out the differences between various loan options. That's why today I want to walk you through one of the most common types of financing for business owners, and it's called the business term loan. We'll cover how it works, the pros and cons, and most importantly, what this means for you from a tax and planning perspective. So first, let's talk about what is a business term loan. Think of a term loan like a mortgage or car loan for your business. You get a lump sum of cash up front, and then you pay for it in fixed monthly payments over a set schedule. The repayment term could be as short as a few months or as long as 25 years, depending on the lender and the purpose of the loan. Unlike a line of credit where you can tap into it as needed, the term loan gives you everything upfront all at once. So what do business owners use term loans for? They typically use it for things like buying equipment or vehicles, maybe renovating or expanding a location. Maybe they need the money to hire staff to scale for growth, obviously purchasing real estate for their business, or also debt consolidation to make sure we minimize the interest cost. Another time to use it is to stock inventory before a busy season or end of the year. In other words, term loans are best for planned one-time big investments in a specific cycle within that business. So how do term loans compare to other financing? Now, if you need flexibility, a line of credit is usually better. You only borrow what you need and pay for the interest on that specific amount. So we don't have to pay interest on something we don't yet need. If you need cash quickly, a merchant cash advance, otherwise known as MCA, is the fastest option, but typically also the most expensive as well. A term loan, by contrast, isn't the fastest or most flexible, but it usually offers the lowest interest rate and most predictable payment terms, which are very important for business owners, right? So here are some of the benefits of term loans. Lower interest rates compared to other financing options, predictable fixed payments that's easier for planning cash flow, right? Potentially larger loan amounts that's available, and it also helps you to build business credit if you repay it on time. Now let's talk about some of the cons of term loans. The first one is harder to qualify. Frequently, banks want stronger credits and also good financial statements. The other con is repayments typically start immediately, so there's generally no grace period, so you have to budget for that upfront. Sometimes they also require collateral, so that could be interest in the business or certain equipments and things like that, so something to make sure you're aware of. And there are also prepayment penalties. So similar to real estate loans, there sometimes are prepayment penalties that occur if you pay off the loan prior to the end of the loan terms. Now let's talk about where you can get term loans. Traditional banks, they typically offer the lowest interest rates, but stricter qualifications, often slower approval process. You can approach credit unions, so very similar to traditional banks, you could get lower rates, sometimes a little bit more personal service than traditional larger banks. You can also go to online lenders. Typically, online lenders are a little bit faster for approvals, sometimes easier for qualification, but we tend to see higher interest rates. And of course, you can always look at SBA loans. These are government-backed loans, typically with very competitive rates, but similar to traditional loans, these typically have a much longer processing timeline. Now, what do the lenders look at? We want to know this because we want to make sure you are best positioned to actually get the loan approved. So here's some of the things that lenders typically look at. Credit scores, generally they're looking for 680 above and 600 or above for many online lenders. They're also looking at revenue, often at least $100,000 in gross revenue to qualify. And the lenders are always taking into consideration your time in business. So typically they like to see at least 2 years in your business if you're talking with a traditional bank. But if you're looking at some of these alternative ones, it could be as little as 6 months for some of these online banks. And obviously for SBA loans, sometimes there is no history of the business yet. Another thing that banks use to judge your borrowing ability is cash flow, obviously proof that you can actually make the payments. Something else I mentioned earlier, collateral, especially for larger loans, right? If you default, what are the assets they can collateralize against? So now let's talk about some smart tax and planning tips. Even if you don't need finances today, here are 3 things you can do right now to plan ahead. First is keeping your bank accounts healthy. Avoid overdrafts, avoid negative balances, because lenders do review those statements, and having a clean record improves your odds of getting a loan. Think of it as being an A+ student in class. Another tip is don't wait until it's an emergency, right? The best terms are offered when your business looks stable, not when you are already in crisis. Another thing you can do now is to build your credit. Better credit gives you lower rates and more loan options. Plus, the interest you pay on a qualified business loan can be tax deductible as well. So even though you might not need a loan right now, you could potentially start using smaller loans or line of credits to build that tax credit now. So here's the bottom line. A business term loan isn't the right tool for every situation, but it could be one of the most affordable ways to finance growth if you plan ahead. And also don't forget, the way you structure and use that loan can also create valuable tax deductions. If you found this breakdown helpful, subscribe for more strategies on how to save on taxes and build wealth as a business owner.